Today, let's review Sofi's stocks and see what's going on. We'll definitely touch upon the volatility, which is dropping significantly. I'll also show the trading volume of options and continue to display the portfolio. I'll discuss the transactions I've made with this stock. We'll also take a look at my spreadsheet and summarize the results for the past week. Firstly, Sofi stock hasn't moved anywhere over the past week. It's absolutely at the same level it was before, with minor fluctuations upward, rise to $7.30 01 point, but then correcting itself again. So we're essentially seeing sideways movement here. I suggest we examine the volatility and what's happening with it. It's completely normal that volatility is starting to decline as the stock is consolidating. Therefore, the less movement there is in the stock, the lower the volatility. If Sofi's stock continues to consolidate at the same level for several months, volatility could drop even further, possibly down to 30% or lower. Let's look at the volatility at the moment. As we can see on the nearer expiration dates, volatility is increasing both upwards and downwards. However, on the farther expiration dates, we see that volatility is not increasing upwards, but is instead increasing downwards. This is a perfectly normal situation because investors and traders are hedging their stocks by buying put options. As a result, put options are more expensive than call options. Now, let's examine the historical and implied volatility. Currently, the historical volatility is represented by the gray line, while the implied volatility is represented by the white line, which is below historical volatility levels. From this, we can conclude that volatility will return to its historical levels. I've always said that you can trade not only basic contracts such as stocks, but also volatility, because at the moment, it's very difficult to make a profit here since the stock isn't really moving anywhere neither up nor down. In such a situation, you can trade the volatility itself rather than the stock, because nobody can predict price movements accurately, but volatility has its historical patterns. I hope you understand what I'm saying, but if not, feel free to ask in the comments and I'll help you understand. We can incorporate this into a program that will help us create a strategy. For example, we could predict that volatility will increase by 20% by June, and then artificial intelligence can assist us in devising profitable strategies. Let's take one such strategy as an example. One proposed strategy is to sell one put option with a strike price of $8 and buy two put options with a strike price of $7. This position means we incur a small loss at the $7 level, but overall we'll profit if there's a sharp downward movement in the stock price or if the stock starts to rise. It's an interesting strategy that I often use, but again, I always remind you that I'm showing this purely for demonstration purposes. It's by no means investment advice, and I don't recommend trading based on bloggers, bots, or artificial intelligence, as it often leads to losses. It's better to think with your own head and make your own decisions. Let's now look at the trading volume. As we can see, the highest volume is concentrated around the $7 level, both for calls and puts. Additionally, for calls, we have a very high volume at $7.50, $8 levels. I'm telling you, it's because of this concentration that we're experiencing such consolidation. In other words, it's because of these volumes. The stock isn't allowed to go up because of this huge wall of calls, and the stock can't go down either because there's a large volume of put options. As we can see, during the morning sessions we're growing, but then the stock declines. This has been happening for many days in a row. Now the stock seems to rise initially, but then falls because the market makers won't let it break through this large volume. And as we can see, the week closed below these values, which is certainly not very good. The question is how to break out of this large volume. To break through this large volume traded in options, we need a large volume traded in stocks. This could happen due to some event or news, such as a report or any other news. Yes, the volume traded in stocks can increase and thus overcome this large wall of options. Therefore, we're waiting, definitely waiting for some trigger. Again, I can't predict news, but if we look at the options put call ratios, we can predict that something interesting should happen in the coming weeks, maybe a month. At least that's what the market's options put call ratios indicate. We'll see what happens. Also, I always show my portfolio to track what's happening. Just a reminder, my portfolio consists of 3 positions: AMC, Sofi, and Tesla stocks. My goal is to outperform these stocks. As we can see, I've additionally opened another put option, expecting the stock to return back up. Here, I deliberately and gradually start opening new positions. The key is not to rush. I don't make sudden moves. I gradually open new positions. There's not much sense in summarizing the week because the stock hasn't really moved. It's staying at the same level. The portfolio continues to grow by approximately 1%, while Sofi stocks are down by 10%. In the chart, the blue line represents my strategy, and the red line represents Sofi stocks. We can see that my strategy steadily outpaces Sofi stocks. Yes, it's a small gap, but it embodies professionalism maximizing steady growth. As we can see, I have 3 strategies, and all 3 gradually outpace the stocks. Initially, there's a small gap, which then grows bigger and bigger. The same applies to Tesla. It's a steady upward movement. That's how I make money. This table is absolutely free. When attached in the description, anyone can access it. Sure, let's also take a look at the 3D volatility. I try to present it. Here we have all the information concentrated about zones, expiration dates, volatility, useful for analyzing it. I often use it to craft a sound position to see what advantage can be gained. Professionals will immediately understand what and how can be smartly hedged here. I'll also definitely show you what the market forecasts for this stock. As we can see, the market suggests that the stock will be worth between $6 to $7 next month. That's the highest probability, meaning it will essentially remain at the same value. But what I also want to point out is that the probability of the stock dropping, for example, to $5 to $6 is 14%, while the probability of it rising to $7 to $8 is 31%. So the probability leans more towards an upward trend, meaning the market implies there's a chance the stock will rise. This is a good sign, again, for crafting a sound strategy, but we consider this over the course of a month. Yes, if we look at a longer term, for example, to August, the situation is roughly the same. The market suggests the price will be around $6 to $7. With possible increases or decreases, there are basically no major movements here. And of course, this pleases me. In fact, the report for this company is getting better and better. The company is becoming profitable, and this, of course, is starting to please. If this trend continues, then naturally, the stock has the potential for significant upward movement. Also, if you're a long-term investor, buying these stocks for 5 to 10 years, then, of course, you have nothing to worry about here. There's not much point in trading or looking for entry points especially. If you believe the stock will be worth $50, which is quite possible, then whether you buy it at $7 or $6 doesn't really matter much. So if you believe in the future of this stock, that's very good because the company is clearly growing and showing profit for the last 2 quarters. The next report is also forecasted to be positive, so the company may show profit for the year, which is also very good news. So let's keep an eye on it. I'll steadily provide updates on this company, as well as show the strategies I choose. Research-wise, I fully admit that I may acquire some longer-term options soon because, again, there is potential for price movement. But again, under no circumstances should you replicate my trades. I'm just demonstrating position management logic here. I might consider buying some distant options to hedge against sharp upward movements and profit from them. But again, I want to emphasize that I'm solely illustrating position management logic. This is, of course, on a simulated account, not a real one. However, very soon I'll open a completely real account where I'll show all the real deals I make. I'll also show how and what I buy actively. Don't miss that moment. Everything will be as open and free as possible. Together, we'll build a portfolio from scratch. I've already recorded a video about how I'll form my new portfolio based on certain principles. Be sure to watch it. Good luck to everyone.